Assalamualaikum everyone. My name is Zahrah and I'm a final year law student. I would like to begin by introducing the speakers on the next panel, the future of Islamic finance in Britain. Our first panelist, Stella Cox, has been the managing director of DDCAP since 1998 and has worked as a practitioner within the Islamic financial marketplace for approximately 30 years. Previously, Stella was a director of Dresdner Kleinwert Benson with responsibility for Middle Eastern institutional relationships and Islamic product development. Our second panelist, Ken Eglinton, is currently the head of the Islamic Financial Services Group at EY. EY was one of the first professional services firms to establish a dedicated team to service clients in this growing industry and is only the professional services firm to offer Sharia auditing services. Our third panelist, Harris Irfan, is the head of investment banking at Rasmala PLC and the founder of the Islamic finance advisory firm Cordoba Capital. Harris was formerly global head of Islamic finance at the Barclays Group. He is also the author of Heaven's Bankers, Inside the Hidden World of Islamic Finance. Our final panelist, Mushtak Parker, is the editor of Islamic Banker, the global reference for the industry. He is also CEO of Mushtak Parker Associates, a research consultancy specializing in finance, the economy, and government. Before we begin our discussion, the future of Islamic finance in Britain, it would perhaps be appropriate to consider some context. On the 25th of June 2014, the UK government became the first country outside the Islamic world to issue sovereign sukuk, the Islamic equivalent of a bond. The sukuk received a strong demand and proved promising for the future of Islamic finance in Britain. The Chancellor of the Exchequer, George Osborne, said that the issue of Britain's first sovereign sukuk delivered on the government's commitment to become the Western hub of Islamic finance and is part of our long-term economic plan to make Britain the undisputed centre of the global financial system. However, since then, there has been a lack of political will for Islamic finance in Britain. Aside from Baroness Wasi, the support of the government has lost momentum and the industry has been left to rely on investment from the Middle East. So I'd like to leave open for the question for our panellists today, whether there is political will for Islamic finance in Britain today and the future. And now I'd like to welcome to stage our first panelist, Stella Cox.
I've worked with Islamic financial institutions, primarily from a London base, for 30 years, and I've been a banker. I haven't actually worked for a bank since 1998, so I'm a bit disconnected, but I still see the wholesale financial services industry through a few perspectives here in the UK. This dialogue afterwards, and I'm fortunate I have some good friends and colleagues here. I always quake a little bit when Harris follows me because I can't speak and hold the audience as he does. But you know, normally, quite often, we have a shared perspective. We work around to get to these points. But I will tell you what I think is happening, and following on from Zahrah's introduction, where I think political will might be evolving or where we might draw upon it. Because in the first panel, there was a bit of discussion about being privately independent and making things happen for ourselves. And maybe before financial crisis, we could look to government, we could look to our financial services industry and expect things could move along. But the reality of life now is that private sector has to make this work too. So in my few minutes, I'll tell you a little bit about what's happening. It does look slightly retrospectively so that we can set contacts, but I'm quite happy to tell you in the questions afterwards about where I see us going. First of all, I'm going to hack through all these slides about DDCAP because I'm not here to promote the firm or tell you anything about DDCAP today, other than the fact that I am managing director in my day job of a firm that sits as an intermediary within the Islamic Sharia-compliant wholesale financial services industry. But just the market that we're talking about today, well, what is that market? You know from your research and your own private engagement that we're pushing up towards $2.5 trillion of assets. Stats show that estimated average annual growth is 20%. I have to say, though, I put some caution around that because I said I've worked in the industry for 30 years, and I think somebody first came up with this figure, Mushtak, in about 1987, 20% growth a year, and they've used it ever since. But we're talking about 500 plus institutions, and we're talking about 75 countries as well. What is interesting, I think, here, we know that we have global hubs. When I started out, I was one of a bunch of bankers that were very much focused on the Middle East. Then we looked at this great enabling from the top down that's happened in Malaysia and Southeast Asia. And now we're looking at Europe too. In some of my other duties that are outside of my day job that I'll reflect upon a little bit in a minute, I'm often locked in battle with regional hubs or for territories, jurisdictions that want to lead in Islamic finance. I'm a big supporter of the fact that we have to join up the global footprint, and there's probably a lot of room for us all, and we all have disciplines, but I would support the UK here. I know that we only have one of our Islamic banks that is really involved in the retail space, and then not to the extent that many of you in this room today might like, but since 2004, the UK regulator has licensed, over a period of years, 6 Islamic banks here in the UK. So that's a little bit more progressive than we've seen elsewhere in the European space. And our enabling architecture, well, London's a leading global financial centre. We have, and again, these stats that you will see, they are variable. More than 20 banks located in the UK that offer Islamic financial services or products. Some of you who are looking for meaningful employment or might want to work in Islamic financial services may say, tell me where they are, Stella. Show me who they're recruiting, because I don't know them and I can't see that there's any jobs here in London. But there are 20, but they're not all offering a full suite, or they're not all fully evolved in their offerings. So, for example, I can think of a couple of global banks that have their administration here, but their front office may be in Dubai or Kuala Lumpur. There are 5 fully Sharia compliant banks here in the UK at the moment, as I've just said. And it's true that Islamic investment has contributed to major infrastructure and development projects. But again, I put a slight caveat around that, because I would say to you, major infrastructure and development projects where there is a real estate connection. And yes, do look at the skyline, and you can see all sorts of examples, as illustrated on the slides, of where that might have happened. And because London itself has a leading share of many global financial markets, it's not surprising that Sharia compliant focus has looked at some of this. For as long as I've worked in Islamic finance, wholesale liquidity has been placed through various structures that use physical assets that can be accessed through London, for example, through the OTC environment of the London Metal Exchange, and also the London Stock Exchange as a platform has done rather well in building up volumes of sukuk that are listed on the exchange itself. Ancillary services, and Ken will speak far more about this, but this is quite important. Our legal firms, our top advisories, are all engaged with the Islamic institutional market, and most of them are very proactive out of the UK. So if you are looking for a legal career, if you are involved, if you are interested in advisory, go to Ken, he'll give you a job. Qualifications, Dowd spoke very eloquently, and Dowd is a dear friend, and I have huge respect for him about the work that INCF is doing. We also, surprisingly, and apparently this is a confirmed statistic, that the UK actually leads in offering qualifications in Islamic finance, notwithstanding the work that INCF is doing, for professional institutes, about 70 universities and more than 30 businesses. And again, I think a bit of work needs to be done around the private firms that are involved in this space, because they have an awful lot to offer. And in some of the committees that have been set up and supported by government to move forward financial services in the Sharia compliance space, this is almost an overlapping sector that doesn't get sufficient attention. And it's so important when we look at developing you and developing the new generation of entrants who are coming into the industry. Just looking about the government and political will. Everything that we've done that has been authorised by our regulator here in the UK has had to fit in with the regulator, the Financial Conduct Authority now's approach to Islamic finance, principles-based approach, level playing field, no obstacles, no favours. I'll translate all of this in a moment. And the fact that the FCA sees that it's a secular and not a religious regulator. What it means in terms of timeline, and when I have longer, I've got pages of this to show what happened when. If anybody really does want it, I'm willing to provide any information I have here and more, so do contact me directly. But the first thought around government, and I said I've been working with Islamic banks from a London base since the mid-1980s, came in 2001 when the Bank of England established the Islamic Finance Working Group. This might surprise you to hear, was from a perspective of financial inclusion, and senior individuals, in fact the governor at the time, felt that no British citizen should be precluded from financial services on the basis of faith. And this was a whole momentum behind all the work that's gone into the industry. Might surprise you, and as an industry practitioner, I would say we've wavered from this initial objective since. and yes, it's been driven by market cycles. And I've sat on various committees. You know, this work initially resulted in getting the regulator and also looking at legislation that might be related to Islamic financial structures and looking where there might be problems. So this level playing field, and it means a regulatory code that fits everything. So here in the UK, there is no chance that we will ever have a separate regulatory code for Islamic banks or Islamic financial practice. Other regulators in other parts of the world have maybe regulated and legislated separately for Islamic finance. We haven't done that. We've made some legislative changes, and you'll hear much more about that from the panel later, and I can see people who, like Ashley and Bilal, who know so much more than I do about this too. But a lot has been in the area of tax, okay? So level playing field, you'll know very well, Sharia-compliant mortgages, double stamp duty, not a good thing. That was looked at and it was addressed through legislation. And in that respect, we've tended to go further in the UK. Where we do see a change, we actually do legislate, but it's not really, it's been within an environment of alternative finance investment regime rather than actually saying these are Sharia-compliant products. We talked a little bit about things that have happened. First Islamic Bank that aspired to really link into the consumer space in 2004. Other banks since, but all really in the wholesale space too. Zahrah spoke about the sovereign sukuk. I'll touch on that very briefly in a minute, just in my last few minutes of commentary, and a couple of transactions that have followed since. Just before the sukuk, in 2013, London was mandated to host the World Islamic Economic Forum. First city within a non-Muslim majority country that was chosen. And that sort of translates into a lot of attention. So in the 10 months before that, government was very engaged because they knew that the WEF was coming to London, and it was important from a government perspective that there should be a package of announcements, which at the time of the event included the Prime Minister saying there would be an inaugural sovereign sukuk. I think he said at the time we're going to consultation, but we pretty much knew that it was going to happen. Sharia-compliant student loans, look, that's not my space, but I do care about it, and there's a work piece that's been going on for a couple of years. I hope it's going to come back into focus, notwithstanding all the comments that have just gone before about debt and loans, and also the formation of the Global Islamic Finance and Investment Group that Dowd mentioned and sits on. That's a cross-border group that engages with perceived leaders and policymakers across the world in Islamic finance. It's pretty much in its infancy, but actually the UK is leading on that at the moment and has chair of it. After the sukuk was issued, what happened in the lead up to that was that government convened something called the Islamic Finance Task Force that time, apologies. 4 ministers at the top. You knew Baron Esparzi very well. She led very much on that from the Foreign Office. She had a parallel in the Treasury as well. 6 practitioners drawn from all different sides of Islamic financial services, and I was one of those, and our work through 9 months was to get the sukuk out into the market. That happened, and the committee sort of came to the end of its lifespan. So since then, what has happened is that Islamic financial services have come under the remit of the City UK. And the City UK is a financial sector body, but it's private sector, but it sits on the government Financial Services Trade and Investment Board, which was announced by the Chancellor in 2013, and the FSTIB has 9 essential work streams. Islamic finance is one of them. Now, in the coalition government, I would say it was probably lower down in the list, but I believe that it's higher in the priority list at the moment. So there is a focus. These are some of the key agenda items that have been working on through the City UK group, and we are feeding into the Financial Services Trade and Investment Board through the work that we do. That's the sovereign sukuk, that's the detail, that's work 1. Outside of looking at all the things that are important to the UK, there are a couple of benchmark transactions last year, I think, that may shape the future of Islamic finance. Let's look at this one first. UKEF. Last year, and again, I appreciate we're more on the sort of debt equivalent side of business rather than looking at equity-driven product, but this was quite important last year. And because it was an election year, government had gone very quiet and a lot of people missed it. Last year, UK Export Finance, our export credit agency, came into the market the first time with a Sharia compliance structure that enabled a flag-carrying airline to raise a sukuk that was pushing up close to $1 billion. The reason that UK Export Finance, whose guarantee ranks pari passu with sovereign, so this was pretty much the same in terms of risk profile as a sovereign sukuk, came in, supported this structure, which was the largest ever in the export credit wrapped aviation sector, be it conventional or Sharia compliant. Why I like this transaction is not for all the firsts that it's achieved and all the publicity, but UK Export Finance could do this because components of these aircraft were manufactured in the UK. And I see a start, finally, not just to issue sovereign paper for the sake of it being there and supporting regulatory needs, etc., but it was linking back into manufacture and the economy. Second thing, and this is just as I finish here, is some of you may be aware of this transaction last year and the year before. In fact, last year was a repeat. First came to market in 2014. International Finance Facility for Immunisation raised its inaugural $500 million sukuk late 2014. Its purpose was to raise funding for a programme that's delivered through Gavi, the Vaccine Alliance, for immunisation of children in underprivileged and vulnerable territories. IFIM has 9 sovereign donors. I'm delighted that the UK is by far and away the largest. I think that programme is through DFID, the development agency. This was important because it was the first benchmark size Sharia compliant bond or sukuk that was really in the social impact space. And I hope in the questions going forward that's something that I can reflect upon a little bit more, because as we were talking about last, and Stuart was as well, this convergence or increasing exploration between responsible investment and Sharia compliant finance and investment is extremely important. There's a new think tank that's been formed called the Responsible Finance Institute, which is actually the brainchild of Governor Zetti. There are other luminaries involved in this. Have a look at it on rf-institute, rf-institute.org. There's going to be an event here in London later in the year, but it's just in the early stages of looking at how social impact, socially responsible investment and Sharia compliant investment might start to explore where the commonalities are, because I just finished by saying from my initial involvement in that, and I am a trustee, I should mention that now, as is Dowd, who was here earlier, they are not the same. We know that, and work has to be done, but I think it's an interesting area of potential progress for it. Thank you.
I do need to correct something, though. I'm head of Islamic Finance Services in the UK. Our Islamic finance offering is global. It's headquartered in Bahrain. So the head of EY, Islamic Finance Services, is located in Bahrain, where we have 20 people full-time working in Islamic finance. I head up the unit in London. I say a unit, that nobody in London is full-time. There's not enough work for us in London to be full-time in Islamic finance. I draw in experts from different parts of the practice to work on projects, and I tend to go to the same expert each time because they've got the familiarity with Islamic finance. I've been with Ernst & Young for 37 years. Last 25 of those or so, I've been the London man for Islamic finance. It's been a fascinating part of my career to see the growth of Islamic finance globally, but in particular in the UK over that period. My main role at EY is to provide services to overseas-owned banks in London, and that's how Islamic finance has managed to worm its way into my portfolio of interests. I was going to talk a little bit about the city, but Stella has said everything I was going to say, but said it better. Talk about the market opportunity for institutions, and because I serve institutions, I consider these things very much from the point of view of institutions. The market opportunity for institutions, notwithstanding the recent oil price declines, is the huge amount of investable wealth in the Middle East increasingly looking for Sharia-compliant homes. You know, and London's got a long history of developing product for other jurisdictions, for money from other jurisdictions to invest in. So I see that as the huge opportunity. Stella's absolutely right that the government's original drive to encourage Islamic finance in the UK was about financial inclusion or to avoid financial exclusion on the grounds of faith. That's worthy, it's important, there's a space there that needs to be filled, but the real opportunity is those global flows. The real opportunity is wholesale banking, not retail banking, in my view. Looking at the trends, again, Stella covered that on the banking side, and I agree with everything she said there. She didn't mention insurance, though. The UK also is home to the first two Sharia-compliant insurers. Okay, one of them was inadequately capitalised, had a retail focus, and went into run-off during the financial crisis. The other one is much more exciting. At Lloyd's of London, there's a unit that started up there that, if they deliver on their ambitions, could really change Islamic finance globally. The other thing I wanted to touch on in terms of trends is preceding the financial crisis, the UK regulator has increasingly been driven by an objective, and all of their actions driven by this objective of treating customers fairly. So many of their regulatory initiatives have been driven out of that objective. They've been holding many bank and insurance managements to account against the objective of treating customers fairly. And whilst I don't want to overplay that, it does seem to me that secular moral dimension to banking does reflect the Islamic determination that there be a moral dimension to business. I was then going to talk again about a number of successes in London, most of which Stella's already covered. One thing that I would talk about, though, is the UK government's and the UK regulators' ambition that there be a level playing field. So, unlike the governments and regulators in some Muslim-majority countries, there's absolutely no intention that there'll be any special favours for Islamic finance. However, there's an absolute determination in government and regulators that where something about law, tax, regulation is inadvertently inhibiting Islamic finance, they will try to find a solution that will allow Islamic finance to compete equally with conventional finance. So it's this concept of a level playing field is very important in government and regulation. Stella rightly mentioned that a number of other countries have legislated for Islamic finance, whereas the UK has never legislated for Islamic finance. And I've spoken to people from governments and civil service from Indonesia, Japan, France, who've come and visited the UK to try and understand the relative success of the UK in this space, and it's relative to many other parts of the world. It's not a stunning success, but it's a relative success. And they come here and talk to people in the city about what we've done. And for a time, I was very perplexed by this question about when did the UK introduce legislation to allow Islamic finance? How does it work? And I couldn't get it until it struck me that in many parts of the world, start with the UK. In the UK, you're basically allowed to do anything unless it's forbidden. So there was no need to legislate for Islamic finance. There's no reason not to do Islamic finance. And hence the UK regulatory agenda was to make sure there was a level playing field. In many other parts of the world, including the countries that I mentioned, you're not allowed to do something unless there's legislation that allows you to do it. And this is why there's been no legislation specifically for Islamic finance, because you could always do Islamic finance. The other interesting, more recent interesting trend is whilst I believe wholesale banking is the space that's interesting, It's interesting, it's pleasant to see a couple of the UK Islamic banks appearing very high on the best buy tables for deposit products, and I really enjoyed seeing that in the papers. So challenges for Islamic finance, not just in the UK but globally. It can be quite costly to offer Sharia-compliant products. You know, there's a degree of structuring involved. You need to make sure that the legals in the underlying contracts don't corrupt what you're trying to achieve. And that can create expense. We need more standardization of product, and the industry is working on that, and there is significant progress, but there needs to be a lot more. There's also a shortage of product and types of product. So all of the banks are struggling with their ability to manage their liquidity. So banks take money short, lend it long. They need to manage that mismatch. And there's a shortage of Sharia-compliant products to allow them to do that, which is why, and I disagree with the earlier premise that the UK has gone slower on Islamic finance recently. I very much want to welcome the Bank of England's recent publication of a discussion paper suggesting various ways in which the Bank of England can provide short-term liquidity facilities to Islamic finance. That's an excellent initiative and will help enormously once they start delivering that. By coincidence, I was at a meeting with representatives from government on Friday, talking about what government needs to do to encourage further development in Islamic finance. And one of the things that they don't want to hear is we need more sukuk. And I took them to task over that, because sticking your toe in the water for a £200 million sukuk is a waste of time if the rest of the body doesn't follow. 200 million one-off sukuk was it's useful to have the toe in the water, but it's of no use if it isn't followed up. So I was very much pressing them to introduce a program of sukuk. There should be an annual sukuk. I don't know the amount. Maybe 200 million a year would be fine. They need to consult with the industry to see what that should be. The value of a program is you'd very quickly, over a short period of time, develop a London Islamic finance profit yield curve that the industry could use as a benchmark. Currently the industry often uses LIBOR. That's not suitable. It's used because there isn't anything else. If the UK government would issue a program of sukuk, you'd have a Sharia-compliant index. Just quickly running through any of the other things I was going to say. I was going to say something more about the sukuk. The reason they gave on Friday, yesterday, for not issuing a program of sukuk is that the government doesn't have any suitable assets. This is arrant nonsense. Every hospital in the land is a suitable asset. They try to hold the fig leaf that these are owned by hospital trusts, but that's not the substance of the relationship between government and hospitals. So, I would encourage you to all write to your MPs and say, Sovereign Sukuk program, very important, use the hospitals. London is important to Islamic finance because London has a huge number of professionals that are well used to developing product, well used to developing liquid markets in product from other jurisdictions, and solving some of those issues that Islamic finance faces around product and illiquid markets. A final thing I wanted to say was about you guys. So Stella kindly asked all of you to email me for a job. I'm afraid, as I mentioned earlier, I don't have graduate entry jobs in London. We do have some in Bahrain, but the whole group in Bahrain is 20 people. What I would encourage you to do is to become bankers, brokers, insurers, IT or operations people, compliance experts, lawyers, accountants, scholars, And once you've got a valuable skill and you're still interested in getting involved in Islamic finance, bring that valuable skill to Islamic finance. Islamic finance has as many graduates as it wants. What it needs is people with developed skills to come to Islamic finance. So I'll end on that careers advisory note.
Bismillah ar-Rahman ar-Rahim. Alhamdulillahi Rabbil Alameen. As-salatu was-salamu ala Rasulih al-Kareem. I'm going to be very, very brief and spend 2 minutes because what I thought was very interesting in the earlier session was some of the questions that came up, particularly like your question at the end. And I think we should be responding to those sorts of questions and spending more time on them. So very quickly, the topic is the future of Islamic finance in Britain. Stella has mentioned, and she has been a part of, some excellent lobbying work and task forces in this country to level the playing field and allow Islamic finance to be accepted in the city. It has made London a centre, one of the global centres for Islamic finance, and that's extremely commendable. We have a government and a political system that recognises the need and is open-minded and inclusive enough to take steps to accommodate that need. And I think, you know, Cameron talks about our British values, but that very much is a British value, and that is something that should make us happy to be here. So I'm a very big fan of what Stella and others have done. On the other hand, I think that we do have some fundamental issues in the industry. I know I'm on record about those. I won't reiterate them here. Essentially, I think there's been a failure at the retail level. I'm really interested to hear Ken say that the opportunity is foreign direct investment for Islamic finance. I couldn't disagree more. That is not the opportunity. It is if you want to create ghost towns in Knightsbridge and Chelsea and have, you know, oligarchs and oil sheikhs buying up 10, 20, 30 million pound properties with a synthetic structure called a commodity murabaha and call that Islamic finance. That isn't Islamic finance to me. We haven't addressed 3 million Muslims in this country. We've created 5 Islamic banks in this country that have delivered a management style which is, you know, at best quasi-conventional. So we've imported management from conventional banks, given them $100 million to, you know, throw away into the wind. And 10 years later, we're saying, well, that wasn't very good. Why hasn't Islamic finance succeeded in the UK? It hasn't succeeded because we took the wrong attitude. So what I'm saying is that the real opportunity, the opportunity, is 3 million Muslims in this country. I don't know how many tens of millions in Europe. But across the world, there is an opportunity not just for Muslims, but also for non-Muslims who are looking at ethical financing. And maybe there's a marriage here between ESG, which is environmental, social, and governance, the non-religious ethical side of finance, marrying that $59 trillion opportunity with the tiny $2 trillion opportunity we see in Islamic finance globally. And we can marry the two, but we haven't done it. Why? Because the management that we install in Islamic banks is, and we're coming back to this question that gentleman raised earlier, is not there to further the cause of Islamic finance or social good or justice or parity. I deal with Islamic finance banks every day. I look at facility agreements and whatnot. And I see, you know, documents that come back to me where it's quite clear that the bankers on the other side have not read these and examined them from a Sharia compliance perspective. There's no intent to follow the spirit of the law. There's some vague intent to follow the letter of the law. So I think if Islamic finance is going to be successful in this country, then we need to look at the attitude that we have towards it. And that also happens at a policy level as well. Policy is not really interested in the spirit of the law. It's interested in ensuring it meets a basic need. I don't think it's met that need because we haven't taken the right attitude. So I'll end with that and give us an opportunity to talk about that later.
Thank you, Harris. Our final panelist, Mushtak Parker.
Okay, suffice to say, this is almost like a homecoming for me. I spent 6 wonderful years at the LSE, and I'm going to rub it in a bit now. When I first registered in, when was it? July, August 1980, the fee I had to pay, the admin fee, £600. And I was on a full scholarship, including book travel allowance, book allowance, everything. So, but I'm not gloating. I'm just saying the huge gap. And I still think the politicians who introduced the tuition fee should be surcharged. We talk about, generation debt. generation state largesse, you know, in that respect. So I mean, I believe education is a human right, so it should be state-funded in that respect. But that's another debate. I just want, you know, I agree with Harris that some of the issues that were brought up in this morning's session were very pertinent, very interesting. But just some general caveats when we talk about Islamic finance in the UK. First of all, the UK is not your usual Islamic finance market, so you have to have certain caveats. It's a non-Muslim jurisdiction. Yes, we have a population of about 3 million Muslims, so you've got to make allowance. When we discuss the UK market, it's got to be relative. Secondly, Islamic finance is not a panacea for the problems and the ills of the world, let alone the Muslim countries. There's a huge, we have to differentiate between the theory and the practice. One of the speakers mentioned this morning about the commitment of the individual Muslim to the Islamic finance and to whatever. Yes, that's given. But I've seen, there's a litany of examples I can give you over the last 40 years, including in the UK, where good men with good intentions, but with no skill sets in financial management and fiduciary management, lost millions of pounds because they did not impart, they had the commitment and the intention, but they did not have the skill sets. No wonder in certain countries like Malaysia is the exception, where you actually have a management code of ethics for Islamic bankers. And if they don't perform to those code of ethics, they can end up in jail and with fines. And there have been instances in terms of the oversight. Malaysia is also the only country where Sharia advisors, Sharia scholars in the field have to be registered with the regulator. And not only do they have to have the requisite education from recognized institutions, but they also have to show the regulator that they have the skill sets to impart that knowledge in financial advisory and Sharia advisory. So, you know, there's a huge, huge differentiation. And I think we need to, you know, differentiate that emotion of being a Muslim, commitment to Islam and all that, with the requirements of a modern 21st century financial system. It's very, very important because a lot of young people I come across, they have this emotional idea, yes, Islamic finance, the principles are there, that's it, and that's all you require. It's not. Finance, as we know, is very complex. The same in terms of the debt argument. But I'm not going to go down that route because Harris knows my views. But suffice to say, you also mentioned about the profit motive. Islam has got nothing against the profit motive. In fact, it encourages the profit motive. It's the way you arrive at that profit, whether it's in a just, fair, and a socially responsible way, or socially, acceptable way. So, you know, we have to be very careful when we discuss this. I've been covering the Islamic finance sector in the UK since the 80s, you know, when Stella and I was in short pants, but I can't speak for Stella.
And I was already working for 20 years.
Yeah. So, a lot has happened. I mean, in the early 80s, Islamic finance used to be very popular amongst the multinationals for accessing murabaha markets and all that. And contrary to normal belief, it was not the Islamic revolution in Iran that spurred drove Islamic finance. It was the people with, the high net worth people in the Middle East, Southeast Asia, who were banking with private banks in London, who were asking these people, these asset managers, that, look, we want now to look at something alternative. We want you to come up with portfolios which are Sharia compliant. And that was one of the crucial early drivers of Islamic finance. The rest came much later in that respect. A lot has been said already, and I don't want to repeat myself. And I just identified 4 areas. The strength of UK as an Islamic finance market, the weaknesses, the current state, and the prospects and the challenges. In terms of the strength, very, very quickly, I don't believe that you can have a proper financial system operating efficiently and effectively and whatnot if you don't have a public policy commitment. If the governments of those countries, in some Muslim countries, they don't even acknowledge they have Islamic finance, including Saudi Arabia, which is supposed to be the home of Islam, then you're going to find it extremely difficult because you're going to have a piecemeal development of the sector. And to its credit, the UK, being a non-Muslim jurisdiction, has done quite a bit much more than many of the OIC 56 or 57 member countries of the OIC in promoting this Islamic finance proposition in that respect. And I've spoken about the history about it, and also I think the UK is one of the first countries to promote Islamic finance under its financial inclusion policies. I mean, we should not forget that, and we should commend both the Blair, Brown, and the Cameron governments for pursuing that. The other strength of the UK is that there is a cross-party consensus on Islamic finance. So if one government changes, it's highly unlikely that the incoming government will change the policy because there is consensus across party lines. And this is very important in terms of continuity. Weaknesses, just very briefly, because of the very short time I have, there has been a regulatory lag in terms of the involvement of the Bank of England and after that the FSA and now the FCA. What do I mean by that? In Eddie George, the late Eddie George, we had a wonderful supporter of Islamic finance, and it's on record, you can read it everywhere, his views on Islamic finance. But his successor, Mervyn King, was not so hot on Islamic finance, so you had that huge disinterest from the Bank of England at that time. But of course, when we had the FSA, we had Howard Davies, was very supportive. And if we had the same type of continuity there, I think we would have been a bit further ahead as we are now in that sense. But I'm glad to say now that Mark Carney seems to be more interested, and then the FCA people and the Treasury, given what happened with the UK Sukuk and all that, there is that continuity. And David Cameron at the WIEF a couple of years ago, and also more recently, some of the UK ministers have reiterated their support to develop the Islamic finance proposition in the UK further. So we should capitalize on that. And I think there's a lot more work in progress, especially I'm very interested in the short-term liquidity management instruments with the Bank of England are sort of researching at the moment, because I think that's going to set cat amongst the pigeons and actually shame a lot of the Muslim countries who don't have equivalent short-term liquidity instruments in place for the Islamic banks operating in their own countries. I don't want to go into detail there, but most of it is on a repo basis, and there are now some people issuing short-term sukuk in terms of their offerings. Of course, the UK, another weakness is the market is relatively small, but that doesn't mean that you cannot have further penetration. And I can allude to some banks like Bank of London Middle East. They've carved out a very interesting niche for them in taking Islamic finance to SMEs, small British companies, English-owned, who've never heard of Islamic finance, let alone a murabaha or whatever. And they're making very interesting inroads, both in familiarizing them with Islamic contracts plus sukuk, potential of sukuk and all that. So I think there's a lot of interesting developments in that sense. Stella has mentioned education, although that is another debate, because I'm still to be convinced about some of the quality of the offerings that some of our top universities are offering, because I can only speak from my own experience and my engagement. I'd like to see a more robust oversight and also an evaluation of what they're offering. It's easy to say we offer Islamic finance modules in this and that, but you've got to look at the quality of the curricula and also the people who actually impart that knowledge. So the other weakness of the UK market is poor marketing and poor market education. A lot of Muslims still very cynical about Islamic finance, partly because they don't understand. They tend to have a tendency to compare like for like, which they're not really, because you are comparing apples with oranges, and so that market education amongst both Muslims and non-Muslims. After all, Islamic finance is not only for Muslims, it's for everybody interested in an alternative system of financial intermediation. So it's very, very important in that respect. Just very briefly on the current state, we've heard quite a lot of what's happened in terms of the UK export finance sukuk, and I agree with you that we should write to our MPs. I remember when they were mooting the original sukuk, they were talking about the toll road, the M61 in Manchester, and the government saying, oh, we don't own that, we only own the subsoil, and you cannot securitize the subsoil of these toll roads. So, they are past masters that coming up with excuses in that sense. I think a great innovation that the Treasury has has led is this Global Islamic Finance Advisory Group, GIFIG. And I think that shows that the UK is not just a passive entity in pushing Islamic finance. Yes, London is the major financial center, and there's a lot at stake here, because I think nowadays you cannot have a truly international financial center without offering an Islamic finance proposition. You can ask that from Hong Kong, from Frankfurt. They're all geared up towards including Islamic finance as part of the mix. And even the new ones coming up, Istanbul, Nairobi, they're all very keen in developing Islamic finance, both in terms of the capital markets and in terms of the other products. Just finally, prospects. Harris mentioned about retail. I think the experiment of Islamic finance in the UK has been a disaster. And here I blame the shareholders and the management involved in those initiatives. First of all, I remember those halcyon days in the 80s and 90s when they used to introduce Islamic equity funds out of mosques with no idea what an equity fund was all about. I thought if you bring it to the community will invest, and oh and behold, you will have a fantastic Islamic equity fund thriving. Real asset management, real banking, real finance doesn't work that way. You've got to have the structures, you've got to satisfy the legal and other oversights, you've got to convince ordinary people, whether they are Muslim, non-Muslim, that when they part with their money, it will be managed efficiently. Because after all, if you lose your money, you lose your livelihood, you lose your savings. So there's a huge responsibility in fiduciary aspects of financial management. So this is extremely important. The business model of Islamic Bank of Britain, for instance, was a disaster. And I'm not going to go too much in detail because this is not the right platform. Expectations, we have to manage expectations. What is achievable and what is not within the, things I said earlier in terms of the UK being a non-Muslim jurisdiction. They're doing it for financial inclusion. So a lot will depend on the private sector and also incoming investment, and especially the quality of the shareholders who are thinking of investing here. I think there's a huge prospects in terms of developing Islamic finance for SMEs and things like microfinance, social finance. Although I have a bit of a digression in terms of views here, I think Islamic finance seems to have a near obsessive love-in with the so-called socially responsible and humanitarian finance and ethical finance. We must never forget that there is a very crucial differentiation between Islamic finance and the rest of these in terms of the prescriptions, the riba, gharar, maisir. These are not necessarily on the same agenda as responsible finance or SRI finance or all the other. So if you lose that differentiation, you lose the original view, the original concept and the view and the ethos of Islamic finance. Yes, they can cooperate. I'm fully, agreeable in terms of that. There should be a very robust cooperation. But as long as the lines are clearly delineated, because we don't want to confuse the next generation of Islamic bankers, with anomalies and potential contradictions in that respect. I think I've said enough. I'd like to, take it up in the discussion. Thank you very much for the LSE for inviting me, and I feel very good to be back home. Thank you.
I think we'll all have different perspectives. Let me tell you, because this is something that I've heard a lot lately. The City UK group that I mentioned as well, I chair that. So some of my time when I'm not in my day job is spent going out on behalf of that group in an outreach program, and we're talking to other jurisdictions that have Islamic financial services. And as I think Ken was saying, there's been interest in the development that we've made in the UK, and you'd be surprised actually how many parallel regulators and other authorities, government ministries are interested in what the UK has done. But this issue of the role of the Sharia Committee comes up quite a lot. And all I'm going to tell you here, I'm not going to opine on whether it's the right way or the wrong way, but I'm going to tell you how the UK government sees it. As I mentioned before, they see that the regulator sees itself as secular and not there to opine on faith. I would say I will certainly retire before I see an overarching Sharia committee that's convened here in the UK. They will say it's not their job. They are concerned about misrepresentation of product, but I think government would also say that if you as a consumer have a product that you think you have a problem with because it's been misrepresented, you have other redress through law. Would you agree that that's a reasonable way to describe it? That is the view. If I have a look at some of our counterparts and regulators elsewhere, I mean, we've been having a dialogue just lately with an authority from part of Southeast Asia that are high profile and that are developing, well, they have a proposition, but they're moving forward more speedily than we've seen them do before. And as Ken said, they have this process that they have to regulate, oversee, authorise everything. And they find this very difficult, that we actually, as a regulator, will not oversee Sharia as well. But of course their perspective is different. It's a Muslim majority country and they have legislated and created regulation for Sharia compliant products and indeed any financial product, because for them any financial product that evolves has to go through the regulator before it gets approved. And of course here it doesn't. As long as you are not infringing any sort of regulation or law, then you can go ahead until something happens that stops it. So that is the position. I can't see that that's going to change. We could look at accountability, and I think Mushtak reflected a little bit on how Sharia scholars might be supervised elsewhere, but that's just the UK perspective, and I know that's the case from top down at the moment.
Yeah, there's actually two strands to your question. This question of regulation of Sharia scholars and also central Sharia board at the central bank. There's two different issues. It's only one country in the world that requires Sharia scholars to be regulated, and that's Malaysia. Most of the Muslim countries don't. You name me which other country? Not registered. Well, I'll check on that. I stand corrected. Okay. But in terms of Central Sharia Board, quite a few are following the Malaysian, because the Malaysian model started the Central Sharia Board. But I can tell you that the Luxembourg authorities are looking at setting up, they won't call it a Sharia advisory board, they'll call it Islamic legal panel, which would be an ad hoc body to which they can consult, and ask for opinions relating to Sharia matters. But this is a work in progress. It will take a long, long time because, as I say, in many Muslim countries they don't even acknowledge, and some of them don't even have an Islamic banking law in place. I mean, in Saudi Arabia, Al-Rajhi is not authorized under an Islamic Banking Act. It's authorized under the general banking law. The same with Al Jazeera, same with Al-Inma, all the Islamic banks who are supposedly functioning in Saudi Arabia. So, this is a problem for the industry, not just for the UK. I agree. UK is not going to go down that route. And I don't think it is necessary to go down that route at this stage.
Principles of Islamic finance in Saudi Arabia don't meet Sharia
banking
principles.
Regulation, he said, of banking regulation.
Yeah.
So the answer is yes, absolutely. That's why they don't use the word Islamic bank in Saudi. Because they know if they use the word Islamic, then that means everything else is non-Islamic. So what's all the population buying then, right?
Well, and S&P has just issued a report, or was it Fitch, saying that about 70% of corporate finance in Saudi Arabia is Sharia compliant. No, I mean, the huge problem, I come back to my earlier statement, without the requisite public policy relating to a particular area, you're not going to have a proper evolution of that industry. And this applies not only to finance, but any other aspect of the economy or society or whatever. You need to have that public policy commitment. And we know what the House of Saud's views are in terms of this. A little bit of positive news. SAMA, the regulator, has set up Islamic Finance Committee in the House. So they're looking because they need to see that the market is developing in an orderly fashion. Because you've had some serious problems, especially in real estate finance in the eastern province in Saudi Arabia, not so long ago, where ordinary investors lost a lot of money. Because you had any Tom, Dick and Harry who claimed that he was a Sharia scholar and gave a fatwa and saying this real estate fund is Sharia compliant. And of course, it turned out it went belly up and a lot of people, ordinary people, lost money. And it wasn't the central bank that stepped in, it was the Ministry of Interior, because the potential for social unrest was huge. Because when people lose money, which they've, saved, there's social and other consequences. So this area of Sharia oversight is very important. One other point, which is more a pointer, once again, Malaysia has got a Sharia governance framework. And under the new Islamic Finance Services Act, it's probably the most robust legislation in terms of the Sharia function in Islamic finance. Some say too restrictive, too tough. So, these are works in progress. And I think eventually other countries will follow suit in a more organized way. Sorry, I'll shut up now.
There's one more point I want to make is that, and Stella is quite right, there's really no reason why the regulators in the UK should be concerned with Sharia compliance. It's not their area of expertise. They can't possibly regulate who should be a scholar and who shouldn't be a scholar, so that's understandable. On the other hand, and I deal with regulators a lot because I'm a banker and we're regulated, the regulator asks me all sorts of questions. They want to know my process flow diagram for going to the toilet. I mean, there's all sorts of nonsense that I have to deal with the regulator, and it takes up way too much of my time. And I think those regulations are set up so that they catch naughty people at big banks like Barclays and HSBC, and they have been very, very naughty. But unfortunately, they unfairly penalize small banks, and let's face it, the Islamic banks in this country are small banks. So I end up dealing with a lot of these nonsense queries that I have to answer. They've never once asked me, what is my process for ensuring that a product is Sharia compliant? That's all. I don't need them to ask me, how do you ensure, I don't need them to regulate, who is and who should and shouldn't be a Sharia scholar and what is Sharia compliance. I understand that they don't need to know the answer to that question, but I think they do, and coming back to the point Stella was making about misrepresentation, I think they do need to know that this bank that represents itself as being Sharia compliant is at least making some effort to ensure that it is a Sharia compliant product. And I've seen too many examples on the shop floor where bankers have brushed issues under the carpet, not informed their scholars, not followed the correct process. And the product comes out as sort of with a stamp on it that says it's Sharia compliant, but I know the real story. So do I think the regulator should be involved in understanding whether there is misrepresentation taking place by Islamic banks in the UK? Yes, definitely. I don't think that's happening.
If I could just briefly add one thing. I totally agree with the thrust of what the other three panelists have said. And my perspective is that this industry isn't going to grow up until scholars are properly regulated, but I don't think that's the job of the UK government. I think I would expect that this is going to evolve into some kind of international institute that will train, authorize, and discipline scholars. And until that happens, the industry won't grow up.
Yes, I have been pushing this with the Islamic Financial Services Board and the IDB group. Unfortunately, the industry institutions, the the multilateral ones, they don't have enough political weight, nor because they are beholden to their paymasters, effectively. And this is a serious, and the mandates are restrictive. I mean, what would be the greatest asset to Islamic finance is to have a universal authorization model. If you speak to the IFSB, that's not part of our mandate. It's prudential and supervisory, but you don't, and then they will issue Sharia standards on insolvency and all these others. Okay, fair enough. But without that, if you don't have a universal model, it becomes much more difficult for different central banks or regulatory authorities to come up because they've got to start effectively from square one. No, it doesn't. You don't have to be a quantum physicist or whatever.
Let's let somebody else ask a question.
Sorry.
We're actually running out of time, guys. We're not going to have time to take any more questions, but we're going to have a lunch break now, and there's going to be opportunities for you to pray on the floor behind the doors over here.
Since we've only answered one question, why don't we just reduce the lunch break by 10 minutes? And sorry, I'm completely destroying your program now. Just reduce it by 10 minutes, give 10 minutes extra. Because we've only had one question. And
this is a student, I'd like to interact more.
It's up to Rashid.
We are writing the rules. This is the Islamic way.
If you have other questions, I guess we could take another. Yeah? Okay. Should we take one from this side of the room?
Can I just, first of all, dispel one myth, that is that if you do an Islamic finance qualification, you'll find yourself an Islamic finance job.
Yeah.
I've almost never seen this happen.
Yeah.
And I'm really sorry about that, because I wish that people who took the IFQ and other qualifications would immediately find themselves a job in an Islamic bank. But we have 5 in this country, they're very small. We're not big enough to take graduate intakes, for example. We don't have training programs. We spend so many hours of our day with regulators. You know, we barely have enough time to generate revenue for ourselves. So training is a very big issue for us. So that's just one myth I want to dispel. And I'm sorry if I'm pessimistic, because I do recognize there's a value in these qualifications and reading. But in the same way as at school, I never took history O-level or GCSE. I learned a lot more about history after school than and taking a qualification in it than, you know, I think the point I'm making is the qualification itself is not necessarily going to help you understanding the subject matter, and I think on-the-job training is. But how do you get into that industry? Well, I can never personally advocate, for the reasons that you point out, working in a conventional banking environment because you're dealing with riba. And yet, on the other hand, look at the Islamic banks. 90% of their intake comes from that background. Ken may be able to answer on the consulting and audit side.
Yeah, I mean, I think I agree with you, Harris. But it's not just training in Islamic finance. You know, I learned far more about auditing, accountancy, banking, and business by being involved in business, not by doing exams, not by going on training courses. So I'm a great believer in rolling your sleeves up and getting involved in the industry and building your skills as you go along, and finding a mentor. You know, whenever I have a Sharia compliant project, or a project that has a Sharia compliant aspect to it, I see that as a training opportunity for one of my people, and I'm sure I'm not alone. I'm sure that you find that across the city. So there isn't a golden bullet of, if I go to Durham and study whatever, I'll get a job in Islamic finance. I think, as I said earlier, you build a useful skill and then try and apply it to Islamic finance.
Did you say you're just going to join QIB? Okay. I mean, I've got another perspective on it, because I work for a financial sector firm and we are very focused in the industry, and I have to say the same as Harris. You know, we're small, but we do have a little program. I started to connect with academia, because I'm not an educator, really out of my work on the government task force with the Sukuk, because there was another stream on education. And actually, government were quite concerned that there are 70 universities saying that they have an Islamic finance qualification, because, as was said before, I think Mushtak said, strip it down, and somebody's looking at a business and finance degree with one module in Islamic finance, and who's teaching it, where's the consistency? Now, that aside, people write to me as a practitioner and say, you know, can we come and be an intern? And yes, we do take some, and we hire people, and so on. But one thing that I found's a real problem when I go to summer school and I go to Durham, and I now sit on the advisory board to one of the universities as well, because I was asked to do that, which is UEL, and I go to Salford too, so I go to a few. They are absolutely astonished if they have some sort of undergrad or postgrad course that they're going through, that they have no practical connection at all. Exactly as you said, it's exactly as you said. So I think in industry, it's our job to find some opportunities. Look, we're not going to fix this immediately. Look at everybody here today. Look at the number of entrants that we have coming in. And I also think it is really important that you've gone out and you've worked in a big advisory firm, because I think it's dangerous when the global financial system works as it does to try and split the two out yet. We can't do that. You know, there's all sorts of systemic risks that might present themselves from that. The good news, go and do training courses. No, I don't think any of us will really prescribe to that. It's quite nice, but you'll end up paying an awful lot of money. There are a lot more events around in the UK now that you can get into for free, that are offered by the good law firms and the advisories, lots of breakfast meetings, and you can get attendance to that. We'll try and take people if you know, they email me, and you'll appreciate I might only be able to take a few each time, but we will try and make sure that people who are coming through their education progress or who are studying do have access to those sort of events. It's far, far better than it was a couple of years ago. It's not great. Between us all, there are some intern programs, but actually, when you look at the offering, as Harris says, you know, you go and you study, you get your IFQ, or you go to a focused university. And I even have people, with all respect to doubt, who've been through INCF and said, I did this, but I've still ended up back at Goldman working on this desk because I still can't get an opportunity in this industry. And it's something that collectively we have to put thought behind. I try and think that if people have taken the trouble to focus and study in a certain way, I remember when I went to an investment bank all those years ago when I was a baby, when, you know, Mushtak hadn't even been born then, and they were very fussy, and I remember them saying, no, we don't make any distinction here. You know, we take in 18 people each year, and we take them from around the world, from all the universities, and we take 7 from Oxford, 7 from Cambridge, and the rest from everywhere else in Britain. And I thought, yeah, okay, that's relevant. And then they started to look at focus and what you'd studied and so on. And if you'd studied music, you weren't going to go and work at that bank, for example. So I don't like to discriminate on the basis that people aren't relevantly qualified, but now if I'm looking to hire, I do like to know that people are sufficiently interested, that they've come through the process and they may have studied for the IFQ or whatever. The ultimate relevance of that, I listen to all that Harris has to say, but I think we're having to work it out for ourselves, and that's a sad position, but it's better than it was a couple of years ago, I hope.
Just very, very briefly, a note of encouragement. This is the first time that you have a new generation of Islamic bankers coming up who've worked their entire career in Islamic finance. So they haven't brought any of the baggage from the conventional sector. And I think that is a positive sign, and I think that's perhaps what you should aim for. And I think that is going to give that extra momentum to the next stage of development.
It's true. And I'd love to be here, and I'm delighted to be invited. But let's look self-interest and commercial interest. I'm managing director of DDCAP. I'm here because I'm delighted to meet you and to know that you're coming through this process. So,
no, just Stella's company. They have done excellent work in terms of.
We're tiny.
No, but
and Harris is right.
You've got to start somewhere, Stella. You know, don't be so modest.
Okay, I think we'll have time for one more question. Gentleman at the back.
What I wanted to ask is, if you look at the conventional financial system, alternative asset classes have kind of grown in importance over time. Private equity and hedge funds are increasingly important kind of owners of, you know, the general corporations that we deal with every day. Do you see kind of a similar trajectory happening in Islamic finance, and do you think there's a demand from kind of, you know, Islamic institutions in the Middle East and Southeast Asia to invest in kind of Islamic finance structured private equity type transactions? So that's the first question. And the second question, which kind of follows on from that, is on the availability of leverage. So we've spoken a lot about the retail offering of Sharia compliant mortgages and government sukuks, but is there really a developed product in terms of either bank debt or corporate sukuks to kind of support you know, those kind of leveraged buyout transactions? Thanks.
Can I start? Mind if I start on the first question? I'm firmly of the opinion, I say this as a banker, that I'm a dinosaur and my days are over for Islamic finance, and that the future of Islamic finance is in non-bank financial institutions, because we just have the wrong culture and the wrong attitude, and we're debt biased. That doesn't fit, that doesn't accord with the Islamic economic model. So the future is undoubtedly through, for example, fintech, crowdfunding, peer-to-peer, microfinance, and therefore, and coming back to the question about, you know, what do we do, how do we get into the industry? Maybe it's at that grassroots level. Maybe it's about looking at peer-to-peer financing in a Sharia-compliant manner. Maybe we don't even have to use the label Sharia-compliant or Islamic. It's just profit and loss sharing. It's risk sharing. These things are all possible now, and it's happening in the conventional space. So why isn't it happening in the Islamic space? So I'm a firm believer that the future of Islamic finance that accords with its fundamental principles is through the non-bank financial sector and not necessarily the conventional banking sector.
I was a conventional banker, moved to Islamic banking, and did that for 8 years, and found that, you know, we're not getting anywhere in terms of what we initially came here to do. Now looking at going back to the grassroots level, you know, just looking at installment finance, you know, setting in a proper Sharia compliant manner. And I think that I agree with you, Harris, 100%. This is now what is the future for all of us, and that's where we should concentrate our efforts.
I agree with all of that, but just to touch on your comment about corporate sukuk, I mean, this is one of the great disappointments that the government have. They hoped that when they issued the sovereign sukuk, that would be the beginning of corporate sukuk issuance in the UK, and there's been hardly any. One of the things we talked about on Friday was the government bringing together the big debt. The issue with the small Islamic banks in the UK is they don't have a debt issuance capacity, and even if they did, they wouldn't be able to do anything of the size to be really worthwhile. But why aren't Barclays issuing sukuk? Why aren't Citi issuing sukuk? What the government officials took away with them is they're going to convene a meeting of the debt officers at these big banks and bring the Islamic banks as well, but principally get the big bank debt officers to debt desks together to talk about what's the inhibitor for corporate sukuk. Why isn't there?
Well, the question we should ask is why is Tesco, Toyota, Nomura, and a lot of the other issuing sukuk in Malaysia but not in the UK?
Because that's where their growth strategy is. It makes sense. I mean, I have this conversation, and I'll just finish on this because it links into the questions as well. Just matching up with what government can deliver and what private sector has to do. We've got to be a little bit careful here. We have a certain wish list, and we have certain things that we can probably ask for, but it can't be one-way traffic. Sure. I think we have to show that we're contributing. Now, government issued the sovereign sukuk, the inaugural sovereign sukuk, because there was a fortuitous window of opportunity with the WEF coming to London, but also because of work between people like Harris and others at the UK Islamic banks, they suddenly became aware that there was a regulatory need to have this sterling-denominated, AAA-rated paper. And yes, it was a small issue, but they didn't do it. And also, it was convenient that other leading Islamic markets wanted them to issue the paper and so on. But on the back of that, yes, they did hope that there'd be an absolute strength of issuance of corporate sukuk. But if you're a market practitioner really working in the market and based here in the UK, the reality was we probably knew that wouldn't happen for commercial and fairly logical reasons. So the focus now has been on, well, what else is on government agenda? You know, government want to raise inward foreign investment for infrastructure purposes. Now, again, when I'm doing outreach work, I don't talk to any government anywhere, be there from Muslim majority countries or anywhere else that isn't looking at Islamic finance and rich pots of funding from one part of the world or another for this very purpose. But it's a matter of matching it all up. So personally, I think the corporate sukuk agenda from that perspective, you know, these multi-billion sukuk coming out from blue chip corporates in Europe, it's not going to happen. I've looked at it, and I just think it's not going to happen now. So we need to find something more meaningful between us that works for consumers' agenda, maybe government in profile and everything else, and it works for the market's best interests too.
I'm going to have a little bit of a whinge, actually, about the UK sukuk issuance, and Stella knows what my whinge is. We had an opportunity when the government said that it would issue sukuk for the Islamic banks in the UK to be a part of that process. And although we had spent 7 years holding the hand of government and attending every single Treasury meeting and explaining to them how this stuff worked, they didn't reward us at the end of it. Can you imagine a sovereign sukuk issuance in Qatar or Malaysia or Dubai, where a bank that is not a local champion is not involved in that sukuk issuance as an arranger? Can you imagine that? It would never happen. In Qatar, you would definitely have one of the co-lead arrangers as being someone like a QIB. You know, in Malaysia, it would be someone like a CIMB. This was an easy issuance. It's an absolute slam dunk. It was £200 million, which is a tiny, tiny drop in a vast ocean. We could have sold it ourselves by picking up the phone to a couple of buyers in the Middle East and sold it to 3 or 4 buyers. It would have been that simple. And yet they didn't involve us. And so now you have 5 banks that are really, really angry and saying, why wasn't I gave you 7 years of my time? We held your hand for that long, and you didn't reciprocate by giving us a piece of that action. And I went on a roadshow immediately after the sovereign sukuk to a number of corporates in the UK saying, look, this is a fantastic opportunity. You can raise sukuk, you can tap new markets, you can find equivalent pricing, blah, blah, blah. Nobody was interested. Who were we? I went to one meeting, and I won't name who it was. It was a FTSE 100 company. And at the time, we were not called Rasmala, we were called EIIB, which is the European Islamic Investment Bank. And he took my business card. This was the group treasurer of a FTSE 100 company. And he said, wait a minute, EIIB? Who are you? I said, European Islamic Investment Bank. I thought you were EIB, European Investment Bank. I would never have taken this meeting if I'd thought, who are you guys? Nobody knew who we were. And I can't blame them because we weren't, I think we weren't given a fair crack at the whip. I mean, it was just a chance lost. And we could have been a champion for Islamic finance in the UK, and I think that opportunity was denied to us. As a result, nobody really knows, who the Islamic banks are in this country.
Yeah. There is a precedent, a solution to that. It's a pity the UK Sukuk came after this, came before the South Africa Sukuk. The South Africa Sukuk request for proposal is the only RFP to date which had a social inclusion clause. In other words, the Treasury forced the bidders to tie up with a local investment bank, whether it's a boutique or mainstream bank, so that the aim was for the local institution to get some of the knowledge. It's a knowledge transfer as well in that sense. So I think future Sukuk request for proposal should include this, and in that way you get the local banks also involved.